Good morning, everyone. Brian Hoops here, Midwest Market Solutions. This is Market Insider TV. This is our opening commentary. It's Monday, September the 22nd. Thanks for joining us. We're taking a look at our trading day ahead. It was rainy for the most part for the weekend here in Missouri. It looks like it's going to be that way the rest of this week. A lot of chances of rain, and this is the rainy season. This is when farmers go to the fields in the southern plains and plant their winter wheat crops because of all the rain that falls during this time of year. And of course, it can also mean some harvest delays in areas. We saw a lot of delays across the Midwest last week. And we may see a little bit more of that, little hangover this week. But if we get some sunshine, producers probably get back out in the fields at some point this week. So let's take a look here at the overnight markets. They're not pretty. We have the dollar index a little bit softer, nat gas softer, crude oil lower, and the stock market a little bit weaker here. You hear gold and silver pushing higher, and I think these are some new all-time highs for both gold and silver in the overnight market. Overnight grains have closed. We're down 3 1/4 in corn. Beans off 14 1/4. Meal down $4. I'm going to tell you all about reason why here in just a second. And then also, you look at the wheat. We are down 5 1/4. Chicago, Kansas City off 2 3/4. A lot of weakness coming out of these grain markets in the overnight. And let's get into it, talking about what happened here. It's September the 22nd. It's Monday. Follow us on Twitter. Midwest Market Solutions is our website address. Check us out there as we will be updating things throughout the day. We've already sent out some text messages with some market moving information. So I'd love to have you sign up to receive our text message and our Twitter feed and all of our newsletters. All right, let's talk about some of the markets and the reasons what is happening this morning. All right, first of all, let's look at the weather here. As I mentioned earlier, harvest activity should resume this week in the upper Midwest. Rains are expected in the southern plains. That will improve winter wheat conditions. This harvest activity, it's kind of been slowed in the last week, but it looks a little bit drier for this week in the upper Midwest. There will be some lingering showers as mentioned in the southern plains. But it's all beneficial. It'll take all the moisture we can get. Grains pressured on Friday. We had bearish technical action on Friday, poor technical closes as the conference call between President Trump and President Xi did not result in a trade agreement. So we traded a lot of that news on Friday, but we're seeing a little follow through in the losses overnight. But there's more news that's pushing grain markets lower, and that is that Argentina suspended export taxes on all grains until October 31st. Now, this is an effort to increase farmer selling of stored inventory, and that would stimulate some of their economy in their country, and this should release a lot of the stocks onto the open market, and it'll stabilize their economy in the short term. And is putting pressure against corn and soybeans as we expect to hear more product being pushed onto the world marketplace competing with U.S. inventories. Speaking of the U.S., USDA confirmed Mexican authorities detected a new case of the New World screwworm virus less than 70 miles from the U.S. border. That's the closest yet. This is an 8-month-old calf, and 70 miles from the border is too close, and too close to getting into the United States. And so any thought of reopening the border sooner rather than later, I think, is really premature. We're not going to happen. We're going to see this border remain closed, in my opinion, until we get the plant built in Texas and it's up and running and has shown to be effective in treating the New World screwworms. So this is news coming out over the weekend, potentially friendly for feeder cattle. Cash cattle trade last week was $236, $238 live, and in the north, $370 dressed, so $1 to $5 softer than the prior week. In the south, we were $239, $240, and that was $240, which would be steady with the market. So decent cash trade, but I think the Packers are going to have to start cutting kills. Look at these cutout values. They're down sharply. Choice was $15 lower. Select was $18.50 lower. We've lost a lot of ground in these products, and that's resulting in poor bottom lines for these Packers. So they are going to need to cut kills over the next couple of weeks. That'll slow down their cash needs, and maybe they can pay steady to lower money. Plus, it'll help stabilize these boxes. Cattle on feed report, I think it's longer term bullish for the industry. It was very near expectations. On feed supplies were lower than a year ago. That's bullish in and of itself. 98.9% was the actual number, just slightly under the estimates of 99.2. Placements, 90.1. That's a 10-year low and below estimates of 91. Markings were slightly below estimates at 87.2%, at 86.4. So one less day in August to market the cattle, but I think trade's focused on these placements that are a 10-year low. Looks to be friendly for the cattle. I suspect we opened stronger off of all this news this morning. Have a great day and good luck and good trading. This has been Brian Hoops for Midwest Markets.